Got Marc LoPresti joining me on the line, CEO, Market Rebellion. Mark, I've been the rebel here the last week, being stubbornly bullish. Am I going to get my clock cleaned? Because my whole point has been 6,800's a line in the sand, and we're trying to hold on to it right now.
Yeah, listen, I think you nailed it, and I've been stubbornly bullish since the beginning of the week as well. I started the week this morning over at your old network on the floor of the New York before the open, and I think I did a pretty good job.
Which one? Got to be more Bloomberg or Schwab?
I've
been around a few over there.
Our friends over at Schwab.
Okay,
I still do it from time to time, even though you're not there. It's not the same.
Okay. But it's all right. I get you once you've warmed up. I like that. I prefer that.
Exactly. Well, listen, I basically said, look, I do not think that the market is going to have a prolonged bearish condition as a result of this conflict. I wasn't surprised to see Monday's sell-off. It happened over the weekend. Markets always have an initial shock, a sell-off on this kind of news. But if you look at the charts historically, Oliver, the S&P has never lost a war, right? If the question is, how long does it take to recover? And when you're in the kind of environment that we are right now, where there's so much good stuff to be excited about, whether it's earnings growth, or overall calming the labor markets, the good numbers that we've had in terms of the jobs numbers lately.
We've had great numbers. Can we break that out for a second, Mark? Have you been as impressed as I have been by these figures?
I have, and particularly the private payrolls number that we just got. I guess it was yesterday. The days are blending into one long thing this week. But look, I think we're going to see this sustained volatility. I'm actually surprised that the vol hasn't gotten higher. I mean, the VIX, I think, has topped this week, Oliver, around a 28 handle when you consider that we were well over 30 during things like Liberation Day and other things that are arguably not as dramatic as what we're having geopolitically. I mean, look, this isn't just about Iran. This isn't just about the Middle East. I referred to this as a TKO for the trade war against China. China cannot invade Taiwan now because of having no access to Iranian and Venezuelan oil. We're going to see a significant drop in China's GDP and overall output. This is the biggest win in the trade war that Trump could have delivered, taking Iran's oil offline for their supply chain. And the other thing that's a pretty dramatic, and I think you're recovering this with your previous guest, Oliver, we did not see China and Russia rushing to Iran's side in this conflict. They have largely,
they are not entirely quiet. There's no word, right?
They've stayed out of it. I think we could be looking, when the dust settles on this, I think we could be looking at a very different and very positive, both politically, geopolitically, and economically, a very positive result for the United States. This is pretty serious stuff that's going on.
I completely to the positive
when it's done. So look, we're going to see these spikes involved. I see 6,800 as that support resistance level as well. Where we close today is going to be really, really important. But unless there's some other strike of some kind, right? I mean, the sell-off today was really catalyzed by this news about Iran hit an oil tanker under a British flag while it was at anchor. Well, when you dig into the news there, I think all it did was interrupt their afternoon tea and spill some crumpets. I don't think there was any major damage to that oil tanker. So we got to be prepared for this vol. Most of the smart money traders I know are making bank this week because it's presented so many great trading opportunities, and we're having fun. We're making money as well. There's no doubt.
Mark, I pulled up call sheet right now, just trying to get something on the China, Russia, anything. And what they've got is will the U.S. issue a level 4 travel advisory? So if we just kind of view that as a proxy for China, tension, the hot spot there, it moved up a little bit in the last week, but not much. It's still below 50%. And to your point, no word from Russia. Apparently, Saudis were on board with what we did. Other, I think, Middle East, groups also have some support. But even without trying to play like geopolitical strategists, the bottom line is that I agree with you in that the logic, pretty simply, Russia's already got a multi-year war going on in Ukraine that, who knows how long they've got resources for that. China is very busy trying to keep up with our AI and not falling too far behind. They've been losing their edge basically since COVID. And I'm not saying it's because I'm like I'm just out here supporting whatever the president does. Like, I think Trump's been very off on pushing for rate cuts with Powell. So I'm trying to take both these things here, and I see that one I think is very positive. The other one that I thought, which is negative, which is pushing for rate cuts, the market might solve that issue in my mind, though, Mark, because if this data keep coming in good, we might not get those rate cuts, and I prefer that. But I'm curious what you think on that.
Yeah, well, look, I think you're right about that. With these numbers continuing to come in the way they have, as we just described, seeing enhanced stability in the job market, that it gives the Fed, whether it's J Powell or Wash, if we're talking about at the end of J Powell's term. But the bigger issue when it comes to monetary policy, the bigger reason why we may not see any rate cuts this year, Oliver, no matter who's in charge of the Fed, is the situation in Iran. War is inflationary. War is very inflationary, particularly when you're talking about this part of the world and the impact on the oil and gas supply chain. Now, I think it's transitory because I think when the dust settles, and I don't think this is going to be a prolonged, dragged out war. I think we're talking weeks, not months. I pray, particularly for minimization of the loss of life on both sides, of course. But I think what we're going to wind up seeing at the end of the day is the United States oil complex being in a better position as a consequence of this change in that part of the world in Iran. You've seen, particularly earlier this week, a lot of those American oil company names being bid up as a result of that. But overall, this is an inflationary thing. That this conflict is inflationary and will give even less reason for cuts this year. Maybe it makes you happy. It doesn't make me happy. I'd like to see some cuts coming, but I think that's the reality of where we are right now, and our CME Fed Watch tool certainly supports that.
I agree with you in that war-driven inflation, commodity-driven inflation is not the way we want to get to no cuts. I think that the economy is strong enough. I mean, consumer numbers, the inflation, last couple inflation reads were kind of creeping a little bit there. And again, though, I'm not that the dialogue I hear is still very much hyperbolic about the inflation situation. I think generally we've done a pretty good job across administrations getting off that super high COVID inflation, but we also would like it to keep going lower, obviously. We certainly would prefer it to go lower.
And look, there are sectors that will do even better. Like when we talk about the home builders, we talk about the real estate sector, the real estate industry. Getting rates down, getting that Fed funds rate down is going to be very good for that. And that's also important because that's one of the largest, if not, John always says the largest employer by sector in this country is home building and construction. So, I would love to see more people going to work. I'd love to see the employment picture improve even more. I'd love to see more homes getting built. We have both a affordability crisis and an availability crisis in this country when we're talking about homes. But that's not going to change unless we get rates coming down. Like, that's just period, end of story. There's no other catalyst besides that.
That part I agree with. I think that probably gets better served with rates lower.
Yeah.
And that is an issue. By the way, ITB today getting slammed because that 10-year yield moving up, to your point. Yep. There's definitely a few areas here which had been solid, which are now hurting a little bit. I think about the banks, which closed the year really strong last year. They're now down in 2026. I think maybe rates are contributing to that possibly to some extent. We also saw, the Russell look really strong. Regional banks, a lot of those things that were pretty strong that might have some interest rate sensitivity are struggling a tad bit here, Mark.
Yeah, they are. And look, as I said earlier, Oliver, a lot of smart traders, some of the market rebels, they're doing pretty well in this environment. I mean, the notion that we're selling off the defense names today, including the drone makers, is like if that doesn't look like stuff on sale, I don't know what is. Even if this conflict were to end by the end of the day tomorrow, we we used a lot of bullets. We used a lot of missiles. We used a lot of things that we have
Yeah,
to.
and we used a lot of technology
We used a lot of technology,
for
and this
Venezuela
also
too.
brought drones really into focus in terms not only of offensive but defensive capabilities that we and our neighbors need to have.
I
I'm
agree.
still red hot on those sectors, man. Red hot.
It's a good looking chart. I'm looking at ITA as a general ETF example for the aerospace. The chart just
Yeah.
put in highs 3 days ago, hit today. To your point, we are getting very surgical. I mean, the idea that we can displace and remove some of the biggest bad guys on the list basically for decades plus without having to put troops on the, I mean, with some troops, but like nothing compared to Iraq War or anything like that. I mean, Maduro was an overnight operation. It was like,
Yeah.
that's
And
surgical.
similarly, Oliver, the AI and cybersecurity names. I
Yeah.
mean, particularly some of the smaller ones that kind of get the baby with the bathwater when we're selling off the mid cap and the small cap names. Some of the best returns that we've had last year and even a good part of this year have been in some of the smaller quantum computing, those names that are focused on quantum cybersecurity and things of that nature. One of the biggest concerns that we had going into this Iran conflict, and that still remains from the people in Washington that I talked to, on the condition of anonymity, of course, is the cybersecurity capabilities that Iran might have from an offensive perspective. So I think, again, when the dust settles, we're going to see those names benefiting from some renewed interest, both from the private sector as well as from the government.
I pulled up Kratos, KTOS. I know RCAT was one a lot of people were watching. Any that you in particular are looking at? I mean, the RCAT chart looks still pretty good too. I mean, you definitely got to have a strong stomach to trade these. Volatility is not cheap, but the moves can be monsters.
That was my number one pick. They asked me for one stock before the open on your prior network on Monday morning, and I mentioned RCAT, and that has delivered handsomely.
Yeah, okay, that's a pretty nice trade there. Tomorrow for employment, to bring it full circle, Mark, I mean, generally we should root for a good number, even if it might cause a little shake up in the bond market, right? That's something hopefully we can get over time. I mean, I would just love to see the economy print a good number when there's so much hysteria around AI and geopolitical concern. It would be really nice to just bang out a beauty there for an NFP.
Yeah, I totally agree. I mean, and I just have a fundamental moral hazard against rooting for bad jobs number. Just doesn't seem to make a hell of a lot of sense to me. And then, of course, the other big thing on the horizon is the March 11 inflation print. I think that's going to be critically important if we're talking about monetary policy.
Good point. Great stuff, Marc LoPresti. Glad we got you
Good
warmed
to see you,
up.
brother.
You the man.
Thank you,
Thank
sir.
you, Mark.